Hello everyone, welcome to our new webinar. It's October 6th, so this will be the first webinar for this month. Let me know if everything is fine, please. I can see Serious Hemi is here, Ashraf as well. Do we have anyone else? Please let me know here in our chat box if you are on YouTube, if everything is fine. Hey, Brian is also here. Thanks for letting me know. So, as you know, the US government still remains in a shutdown. Stocks are still up. It can be due to spending cuts, but who knows what will happen in a month or so from now when we'll get some more economic data that is also delayed, as you know. And also we didn't got this non-farm payrolls figures on Friday. Plus Trump could even make it worse, especially if he will really try to get rid some of the part of the government, some of the people that are employed there. So also what is maybe important to add, that now a lot of paperwork will also stay behind, and this will obviously have an impact like on housing starts as well. So figures next month could be pretty interesting, I think. So the dollar today, as you know, it's a bit mixed. We are seeing higher US dollar versus euro versus Japanese yen. As you know, Japan will most likely have a new prime minister who seems like have with a dovish approach, and that's why dollar yen is making moves towards 150. But we are already seeing comments that not all are happy with this weak Japanese yen. On top of that, we are also seeing euro dollar coming to the downside because French prime minister resigned. So it's a bit interesting start of a new week, but what is really important is that we have some gaps opened on the FX spot market, which usually will get filled. So that's something that we should consider. Now, when looking at dollar index, like I have been saying last week, because we have only 3 waves up from the most recent 2025 lows. I'm just wondering if this is just a correction and you will see another push to the downside to complete this ending diagonal at a bit lower prices. So I cannot confirm yet that we are bottoming, but I certainly believe that this could still major bottom could still show up sometime this year. But for now, when we are still in the risk on mode, of course, this is not the case yet. And if we even maybe go to the smaller time frame, okay, so last week I said that, let me minimize this. Okay, last week we said we have only 3 waves up. So that's the most important structure that you should focus on whenever you are in a higher degree downtrend, because if you don't have 5 waves up, it means that downtrend is still in play. So I'm still thinking that we could see more weakness, but I know that and understand that today we have seen a pretty nice recovery here, but not all of the pairs. Like if you look at Aussie cable, not all of the pairs have seen the same move, because most of the most of this strength came from the euro weakness because French prime minister resigned. So this can still this thing can still come back to the downside, maybe try to fill this gap a little bit lower. But of course I am observing even this interpretation as well. If we just stay sideways, even triangle could be the case here, and then even this gap, which firstly could act as a magnet, and after a fill, who knows, if we get the rebound, could even complete this triangle pattern. It will see final push to the upside here for a wave C. But even this wave structure suggests that on a bigger picture, this drop is then still not finished. So that's I'm somehow leaning more towards bearish view here for the dollar. Now looking at the euro, of course it's the opposite but same picture here. We are still trading at this trend line support. So as long as that's the case, and especially as long as we are above 116 figure, we cannot say that we have a top in place. We really should see something very sharp sell-off that will take the price down for more than 100 pips, and we see a close, let's say, below 1.15, then I could argue that maybe we are really really topping out here. So for now, that's still not the case, and that's why I am observing this interpretation still. We haven't really seen a spike here below that 1.1646 level yet, so maybe even this could still hold if maybe there will be other pairs that will continue higher. I mean, if we take a look on cable, you can clearly see that this one is doing much better, and it's holding up quite well here above 13326 level, and looks like that this sideways price action that is seeing right now could be even wave B as part of some higher degree triangle. So I'm looking for at least one more push to the upside, but then maybe we face some limited upside here around 61.8%. It was also the swing that was also the swing high back from July and August as well, so definitely quite an interesting level up here. But I still think that this one firstly could be seen, but not necessarily we will break through here. Aussie, I like Aussie, to be honest. Now maybe to show you some of the wave counts I'm tracking here on a daily chart. So the first and one wave count shows that maybe we could be here trapped in some running triangle that is still incomplete. But the running triangle should be made by 5 subwaves, A, B, C, D, and E. So you're now in wave D, which I believe could aim for higher prices. But then I came out with another idea that what if we see a straight push to a new high, then this could be even diagonal formation, so also pointing higher here. And what's the best about both of the interpretations, that if we take a look on a smaller scale here, we can see that that was a 3 waves down, while this rise has been somehow very sharp from that low. So I see this as an impulse, and that's a correction. Could be even the head and shoulders bottom formation here as well. You can see here possibly we have the left shoulder, right shoulder, sorry, left shoulder head and the right shoulder, and we could be looking for a potential break above the neckline. I assume that this could happen this week. So the question is, we'll get only wave C up if we really are going to remain stuck in a triangle, or maybe we get a very strong push to the upside that will take us here to new highs of a potential diagonal, as I said. So for now, I think that Aussie and commodity currencies in general are doing quite well. They're looking good, but of course it's not the only picture for the dollar that matters itself. When you look at the euro, you definitely have to look at other correlated markets pairs as well here. Not only Aussie, I mean, if you take a look on dollar Mexican peso, yes, we are coming out of a triangle on the daily chart. So you could assume that we are coming into some late stages of this impulse from January. And by the way, we were looking, as you know, for a major reversal of this previous uptrend here on dollar Mexican peso. And we have seen a pretty nice sell-off since Trump took office. And I still think that there is some room for more weakness, at least one more push to the downside, because if you take a look here on an intraday time frame, and you can clearly see that that was only a 3-wave rise. So again, like I said previously, whenever you see only 3 waves up from new lows, especially when afterwards the market is a bit sideways, it suggests that that was a corrective flag. In our case, it was a corrective flag that belongs to more complex pattern. So I still think that more weakness could be seen. Maybe now we get some sell-off into wave D with 3 waves. Let me label this. And then, of course, we could see some stabilization closer to the lower trend line, but then after a wave E rally, which could form then ideal textbook triangle here in a fourth wave. So after that, another rebounds later on, we could see sell-off here. So even dollar Mexican peso, of course, is still bearish in my opinion. And what's maybe the most important to observe is keep an eye on this 1850 resistance. Notice that that was the previous lows here, retested a few times. Then we broke below that level, and now the same level was rejected on the upside. So I think that this clearly defines that we are for now still in this potential bearish continuation mode. But of course, if we suddenly would see more gains and a break above 18.60, then things could change around here. Now, looking at dollar CAD, this one, Canadian dollar is definitely not something that that looks anywhere similar compared to Aussie or Mexican peso. As you know, it's much weaker, and even this price action is really not beautiful. I mean, it's a very nasty price action, but it's fine when you're trying to identify what or how the correction looks. So this is clearly something that I would label in a corrective look, because it has a plenty of overlaps. Of course, there are some alternative wave counts as well, which could maybe show that that's a leading diagonal and that was a counter trend movement, and you will see more upside. But what's good thing still about this intercurrent interpretation that I'm tracking is that WXY also favors more upside. So I think that we could see a retest of this 114.020 level. It was fourth wave swing high back here from May of this year. So this could be a next interesting resistance. So on dips, if we see a pullback before this level, we would really be retested. Watch out for support here around 1.394. I mean 1.39 is something to watch. So this whole zone could be interesting. It was swing high here in mid of September, then a new support on a retest. So if suddenly we see more corrections here going forward, of course I would be looking this to be another interesting support, and then maybe a final leg push higher. So dollar yen, as you know, last time I presented an idea of an expanding triangle. So far we have seen a very nice sell-off, but then after new elections in Japan, we have seen a strong recovery higher back towards this trend line, and it's just another example why, as I said last time, that these expanding triangles are very tricky. But what is maybe the most important right now, if you just try to ignore the wave counts for a second, is that we have this massive gap lower, and usually these gaps are going to be filled. It doesn't mean that it will be filled in the first 24 hours of a new trading week, which usually is the case, but it's definitely something that could drive the prices lower. It could be like a magnet, and even if we see before that gap is filled, another push to the upside, I still would aim for a potential reversal later on. I mean, I'm tracking here different interpretations on dollar yen. The primary wave counts shows that we could be looking and turning down still for a deeper wave D, but if this resistance around 151 is taken out and this gap is not filled, then maybe we'll see and have to wait on a reversal a bit later. But still, I think that there can be limited upside around maybe 152.50, one up to 154. That would be the resistance levels that I would pay attention on. So dollar yen, it's not really interesting for potential trades, not at this stage, because as I said, it's just this expanding triangle. It's a bit tough to track, and definitely whenever we are that close to this invalidation level, I just rather wait something more aggressive higher, and then potentially watch for any kind of an impulsive sell-offs from that mentioned resistance 152, 153. That would be my my interesting scenario for potential shorts later on. Now regarding the stock market, we are still clearly in uptrend. and looks like that even this fifth wave could extend a bit higher. I will look at the intraday wave structure, because as you know, whenever market just stretch extending higher and higher, the pullbacks will be much smaller, so we don't have a lot of destructors or wave counts to work with here, because obviously one is in the game for the last several weeks. So I think that maybe some intraday structures could be much more useful, and maybe there is a bit of more upside here to watch for this wave 5. There we have some interesting fib resistance levels, and even if we see some sell-off, I can see some gap here as well from this week around 6,760. So maybe that's the first support. A little bit lower could be a support around 6,750 or so. So after a free wave retracement, if we get one, then of course I would be looking for another push higher, and then maybe some resistance could be seen in the middle of the week. But overall, of course, that's a very strong uptrend, and if we ever see any kind of surprise and turn into a new deeper correction, of course, could be just a wave 4. Because if you look here at seasonality here, we are in October. October was seen as a pretty good month, but this was usually the case when we were before that seeing some consolidation phase. But for now, that was not really the case. We are just keep moving higher since April. But as I said, whenever we see some deeper correction, still fine within uptrend. And now when maybe when we have this shutdown happening in the US, maybe indexes in Europe are even more attractive. I mean, we are breaking some interesting trendline resistance here on German DAX. And as you know, we've been looking for this to be a corrective pullback. And what is really important and the most interesting right now is that we have here on a 4-hour time frame some very aggressive and sharp move higher. And that's clearly what you want to see when you are focusing on continuation of the higher degree trends. You want to see something like this, because that's usually the confirmation that higher degree trends has resumed, or that the previous correction has completed. So now when we are trading at this level after such an extended lag here up and out of this base channel, I just think that of course we should be aware of more upside. What's interesting, and what I really like here, if you look at the cash market, we have some very nice gap here as well. So if suddenly you see a bit of more weakness here, I think that this could be very nice potential support for this wave 4. Okay, so I will just try to label the wave counts here. So if we see this previous lows here from today retested and even broken, still fine. I believe that this could be then just an ideal and much better support for a wave 4, because whenever we fill this gap, as you know, market could turn around. So I would closely watch these levels here. I would not turn bearish if we just break the previous swing intraday swing low. I would just be looking for a much stronger support a bit lower here, because this clearly could define the end of the wave 4 then. So that's for German DAX. Obviously I'm aiming for new all-time highs, but then you should be very careful whenever we will have a completion at least of this current 5-wave cycle that we are tracking. Now looking at crude oil, as you know, I've been looking for lower crude oil for a while. Firstly, I thought that it's going to be an not ending diagonal, but a drop that will come out of a triangle. But notice that this weakness already extended here to a new swing low. But now we are stabilizing a bit, but still fine, because I just think that that's just a correction within incomplete downward structure. So what I'm looking at is potential ongoing weakness within this possibly diagonal formation in wave C. That's one interpretation, which suggests that then we should have a bit of more weakness and another wave 4 rally and then another wave 5 down before we can fully see this leg as completed. That's one thing. The next interpretation is that what if we are in a complex correction? That was one correction, that was wave X, and now you are in the second correction. So that X is just the mid pattern between first correction and the second correction. So this could also be the 7th swing move to the downside, but even this one suggests that we should then see more weakness after this wave B rally. So we either see a sell-off that will occur into wave C of 3 of an ending diagonal, or maybe it will be late stages of this WXY formation. So I think that's a pretty nice resistance up here. Let me just try to zoom this in for you a little bit. So here could be an interesting resistance. It's also the trend line connected from that September lows, and we have some swing highs as well here, around 62 up to $63 per barrel. And if you will go to the smaller time frame, you can also see some gap as well here, and these gaps, as you know, will usually get filled. So if we see some more upside, I would still look for a reversal lower later on. Now looking at gold is extending very nicely to the upside. We've been looking for this intraday flat correction with our members last week, and now we are just, it looks like that market will try to retest this very big level 4K, and then maybe we get some new consolidation or a reversal. It could easily be just another fourth wave within uptrend. But now when we approach this 4K level with these 5 smaller waves here up from that 3630 level, and also divergence on the RSI, of course, around 4K, you should be maybe careful and just be aware of some similar pullbacks like we have seen here in the past intraday cycles. But overall, this trend, of course, is just still here. It's still strong. It's been extending for both of our targets here that we were looking for. The much more extended target, as you can see here, is just above 4,000. So maybe this one is still coming into the play, and then maybe next year, if not earlier, we will see a reversal to a higher degree, fourth wave retracement. Also, maybe it's not a bad idea to keep an eye on these large speculators. If they will be heavily long, this could then later on means that maybe it will be time for a pause. But what's interesting is that despite very strong push to the upside we are seeing right now, these speculators are still not that heavily long. So it looks like that there's still plenty of bullets left, which could keep these metals in uptrend. However, that's not up to date, this COT data, because the government is in shutdown, and I think that this data is not updated. Now let's take a look also on silver. So silver is also in uptrend. If we take a look on bigger charts here, looks like that we are aiming for these new all-time highs before we get some correction. But if you take a look here on a 4-hour time frame, what would be very nice from a trading perspective is that all-time highs will not be reached, but firstly we still see this wave for retracement, and then we try to aim for new highs here. So if you see a retracement, which certainly it's not something that we would look for, because we have these 5 waves up, so definitely some corrections could show up. But when you see a correction, the previous 4 waves is something to watch for. So $46 in such case could be very interesting on dips, but that would be a massive pullback for this for silver, because volatility, as you know, is huge. Could be 6 to 7%, and if you see 6, 5, 7% of a retracement on silver from current levels, you know that there could be some change in sentiment and even more powerful supports later on a bit lower, especially if we will have an ABC retracement. Now let's take a look also on some of the single stocks. As you know, stocks are doing very well. Here, for example, we have Apple that is trading at this resistance potential resistance that could temporarily maybe cause some retracement, but overall notice that we are still in uptrend and far from completion of this impulsive cycle. So I'm still updating regularly these wave counts, and will continue to do so. As you know, in our website here we have the US stocks still in beta version, and I will post a new update soon, so make sure to register if you are interested to see more of the updates. The latest one I will post them this week. So where I left here, so April, after any kind of a retracement, watch and be prepared for more upside. If these current levels here around 258 will not cause a pullback and will extend higher, then maybe on a significant breakout could be the new support on the next retracement. So after any retracement here in 3 waves, of course I would be looking for more upside. Boy with the pipe is just saying AMD. Yes, I prepared AMD as well. As you know, this one is trading in pre-market. Pre-market is up here. We are at new highs. That's up more than 30% because of an agreement with OpenAI. And as you know, any company that will make an agreement with them is most likely going to experience a massive push to the upside on their stocks. So we've been looking for this 4th wave supports down here, and we are now seeing a very nice push higher, but don't fall into this hype right now. It will be a massive gap higher, and as you know, these gaps, whenever they stay open lower and you see prices trading at new highs, especially if you are able to count 5 waves up, then obviously you just should be aware that maybe at some point this gap in the future will be filled, and there is a risk that price will come lower. So I would not be chasing markets up here. I mean, it's a pretty good interesting levels, maybe if someone is long, to look and book some profits up here. Looking at, but as I said, I will be making fresh updates on those as well in our single stocks beta version services. What I have on my list, Amazon as well. I think I posted free article last week about this one. I mean, it's really interesting price action. Notice that we still haven't seen a retest of these February highs, so until we reach these levels I will certainly remain bullish here, and I think that we have some very nice potential ongoing flat correction here. This could be wave A, wave B rally, and now maybe some weakness is showing up to complete this wave C. Maybe this week around 210, that would be a very nice attractive support level, but maybe for a real rebound we will have to wait maybe till earnings. But then let's say in 1 to 2 months from now we could be maybe trading at new highs. Invalidation level is very well defined here below 190, my opinion. But even if this level is broken, then I would most likely adjust into some more complex correction pattern, but I still think that at some point we will be trading up here. So if we see more weakness, I think that's a pretty nice support here around 38.2% of wave 3, which usually is interesting, the most interesting fib level for the completion of a wave 4 correction. Now looking at also this one, ASML company, as you know, that's a Dutch company, but it's also trading on Nasdaq as well, and it's pretty important tech company in semiconductor sector, and this one is making some very nice aggressive push higher, and we've been highlighting the bullish pattern already here back in, I think, end of June, start of July, when we launched these US single stocks. And so far you can see that prices are already trading here above 1000. Looks like that we may even try to attempt of a break here above July 2024 highs. If you look at the subdivisions, even if some would argue that this is somehow wave C, even this wave C should be structured and subdivided by 5 waves, right? So that's not really the case here. So whenever we get some pause, it will be totally fine, just a pause within ongoing trend here, and invalidation level is very well defined here. Okay, these levels, because if we think that we are in a new impulsive sequence, then wave 4 should not trade into the territory, the big wave 4 into the territory of this wave 1. Now also some of the stocks that could be maybe much more interesting when it comes to current market positioning here, and here we have Berkshire Hathaway. I've been highlighting the very nice structure that we are seeing here. So this could be completion of a flat correction because of that 5 waves down. Let me just put the labels into the right spot here. So that was 5 waves of decline. What I really like is that after earnings we got a massive sell-off. That was what, more than 50%. So very nice pullback actually back into this somehow pivot level here around 460, 450 area. And what's the most important is that we got a confirmation that bulls want to resume here because of these 5 waves up from that most recent low. So this impulse itself suggests that minimum 3 legs up should unfold. So it either can be ABC, okay, or ideally it will be new 5 waves up if really my call is correct here, that was a completion of a flat correction down here. So watch out for more upside. I think that's a pretty interesting level that has support zone around 485 that already has been retested. It doesn't mean that it won't have another retest here, but even if it happens to come lower, still very nice and beautiful reversal could happen later on. And as I said, these gaps is something that makes me very bullish on this one. Of course, invalidation level at 453 should not be reached then. Now looking also on Ford, this one is also trading very nicely higher. We have higher highs, higher swing lows for some time now, away from that April lows, like in each index and almost each single stocks. But what I would be watching for maybe in the next 2 weeks or so is that we wait a minute, we have earnings are, yes, on October 22nd. So as I said, in the next 2 weeks or so, maybe we could see a push to the upside and then finally to fill this unfilled gap from those earnings that were released back in July of 2024. So this could be filled. Maybe even we could see a straight move to the upside while we are above 11.36. But if this level is broken, then something more complex could show up, something like that. Okay, so if we stay, let's say, stay sideways here, or maybe even after earnings on October 22nd, we gap lower, that would make an ideal bullish setup, in my opinion, for gains later on, especially if this gap for now remains still unfilled. Okay, so the most important for me is this first rebound here from October, which clearly defines that maybe we are bottoming, especially since we also previously broken above this ending diagonal trend line here that act as a very nice support on a retest. Let me just undo these things here. Okay, now let's take a look also on cola as well. Now I have presented in our report that most likely we still did not complete this diagonal formation that I'm tracking. I'm expecting more gains. Each leg in a diagonal should be structured by 3 legs. And if you take a look on this wave 5, maybe some would say, well, maybe that was a 5th wave. Yes, that's certainly possible, but the reason why I would be looking for another potential rebound here is because the market is pulling back very nicely for the 61.8% right into this, again, unfilled gap. So with a very nice, what, 13 12% of retracement from the highs. I just think that this gap could be very interesting and cause some rebound. Maybe it will cause only temporary rebound, but as long as we are here above 60, I just think that there is a chance that we will see some recovery. But ideally we will see wave C higher, but of course you will have to see some very strong rebound then in impulsive fashion towards $70 to make sure that we really are going to aim for new highs. But I think that this could be very interesting, attractive support here. Also the final one will be Nike. As you know, I covered this one as well a lot of times in our past webinars and also in our single stocks reports. And I said that the higher degree downtrend could be coming to some very attractive, interesting support. So I was looking for potential bottom of this wave 4, very big retracement here, as you can see, and it's somehow similar in time compared to this 97 to 2000 pullback. Okay, so now we have seen a very similar length of a retracement, very deep, 70% of pullback. People are still buying Nike products like never before. So in my opinion, that's still something to watch for, and I think that there will be potential new stabilization that could already be happening here. And the most important thing is obviously that we broke some wedge trendline resistance, and this happened with this impulsive recovery. And you can see that we already retested this buy zone again. Notice this gap here. Okay, so this gap has been retested. We have seen new earnings released, I believe last week. Prices spiked slightly to the upside. That was one gap back from August. It has been filled, so I can delete this. And now we still have earnings gap open here from last week. So maybe we are still going to retest slightly lower support levels, but this could be just, let me just label, just an ABC retracement here. Okay, so in my opinion, very nice and interesting support for potential rebound. So this stock generally looks very beautiful, I think. Now finally, let's take a look on cryptocurrencies. So last time when I talked about the cryptocurrencies, I thought and I said that there's a chance that Bitcoin could even retest and break 107 supports because there were a lot of stop losses below that level. Market turned around. We have seen a very sharp recovery since the US government came into shutdown, and a lot of altcoins are doing pretty well. And the adjusted wave count shows now that maybe we are coming here out of a triangle. So it's a very strong push higher here that could definitely keep this trend alive for a few more weeks. But keep in mind that we are here in October, okay? And if you are our member, or if you were following our past analysis, then you know that we have been looking for this bull run for the last 3 years. And now when we are moving into this October of 2025, it means that we could be in the final month of this bull run. It doesn't mean that history will exactly the same repeat itself, okay? But it's definitely something that we should consider, especially if the Elliott wave structure itself, it also shows that we could be somehow seeing new prices here within a fifth wave, maybe even coming out from some kind of a triangle, which we know what means whenever you see the final thrust out of this pattern. So still, obviously there is room for more gains, but just keep in mind what could happen maybe, or what could follow next year in 2026, because always tops and bottoms is just not a one-day event, it's a process, okay? And before you will be able to confirm that market is turning, of course we will need much more time here. But when looking also at the crypto total market cap, we have seen a very nice break out of this triangle as well. So this itself also could be a confirmation that we are running into the final stages of this potential impulsive advance. So here fifth wave We don't know how far this thing can extend, but certainly for now it's bullish, and even other altcoins could do well. We have seen a pretty nice rebound here on the Ethereum that we also covered last week, and you can see that there was a very nice rebound from the lower side of this corrective channel, and since the prices extended through the mid trend line here of this channel and now also beyond the upper line, obviously this makes a very bullish case here. So we are looking for new highs here. 5,000 could be retested. Support on dips whenever this one shows up could be the trend line, and then maybe 4,400, 4,200 if we go even deeper. Also, when it comes to the Ethereum itself, I think that we posted that we have it here somewhere. The ETF on the Ethereum, this one obviously makes a very clear, very beautiful pattern here. Waves 1, 2, extended wave 3, wave 4, and we are looking for wave 5. That was December highs, very nice, of 2024. Very nice support and dips, and now obviously we are aiming for a final push higher here as well. Litecoin, this one also has seen a very nice rebound. I think we've been looking for this 100 level to be some important support on retracement, and what happened so far is something that you want to see whenever again you want to confirm that the trend is, or the cycle is changing from this temporary corrective movement to bullish trend. So here previously we had an ABC drop, and this broken trend line suggests that more upside could be seen. I'm quite certain that if you are working with the Elliott waves, that you see this as an impulse, so this leg itself points for more upside after any kind of a pause. Maybe even some smaller right shoulder here could unfold of a head and shoulders bottom formation, and later on we could see more upsides on dips. The support could be around 115, all the way back to maybe 110 if we get a bit lower, but definitely we are seeing bullish formation. If we start breaking higher just already today, maybe then we could come out of a triangle, and still you will get some pullback a bit later on. Okay, okay, I think I came to the end of my today's list, so that's it. By the way, if you are interested on more analysis, make sure to visit us at wavetraders.com, and you will be able to track all of those and see all of these analysis on a daily basis in our app. And also we have a chat room where we share also a lot of charts. So hope to see you there, and good luck, good hunting this week. Bye.